So if you're Betfair Trading, one of the things that you're really interested in is the perfect Betfair trading strategy, something that just works. But the fact is, a lot of people completely overlook the basics of how you should be trading and why. And there's actually a lot of value and money to be unlocked if you understand exactly what your objective is and how you should be trading, because that gets overlooked massively in a lot of videos that I've seen. And I thought it was about time that I went back and readdressed that so that you can understand exactly how you should be trading, the way that you should actively trade, and how you should manage trades when you have those positions within the market. And that's what I'm going to explore in this video. If you're interested in learning to use Betangel, head on over to our website where you can download a free trial. If you're interested in learning how to use it, then head over to the Betangel Academy where you can do exactly that. And if you want to talk to like-minded people, then head on over to our forum. So I think one area within any trading, but particularly in Betfair Trading, because you don't see people going through this very often, which is why I'm doing this video, is the actual trading process, making a selection within a market. People sort of tend to focus on strategies too much, and they don't focus on really good trading. And very often what I say to people is, I don't do anything spectacular, I just do it very well. Most of the stuff that I'm doing is fairly simple, but my execution is great. And I'm really focused on trying to find the right opportunity, but I'm also managing it effectively as well. People very often neglect the trading process. I see this in support, I see it when I look at people's videos, and the trading process is quite simple when you look at it. It's you open a trade, you close a trade, and then you hedge a position. But a lot of people don't follow that strictly, and they also do crazy things like changing their stake as they're actively trading. And it looks really, really messy to me. When I look at a lot of videos, I'm just sort of thinking, what are you doing? But there is a structure that you should follow when you're actively trading that is clearly defined. I won't explain it in great depth now, because what we're going to do in a second is look at a video where I describe it using a live market, what I'm doing and why. And there are certain characteristics within the market that you can help to influence your particular trading. So if you offer to open and you offer to close, that will be beneficial. What am I talking about there? You will see in a minute when we have a look at this video. But also, deciding which side of the market to enter and making a split-second judgment on exactly how you're going to do that is helpful. And when the trade is in the market, actively managing that position is useful as well. That will help you squeeze that little bit more profit out of the market. If you just put two positions in the market and leave them there, and the market moves around and it doesn't influence what you're doing, then you're probably leaving money on the table, or perhaps tipping yourself in the wrong direction. All of these little things will significantly help you in the longer term. But also, you look at what happens within the market, and nearly always, whether it's a football match, horse race, or anything, the favourite nearly gets all of the money. So maybe you should just trade the favourite, or should you? Because you're always going to have to keep an eye on the favourite, but it doesn't necessarily mean that you have to trade it. So let's examine all of these key points by actually looking at a market and me talking you through some of those key points real time. So when you start Betfair Trading and you start using a ladder, there are a number of things that you probably are not doing totally correctly, or you are misinterpreting, or you're not completely fully understanding what your objective is or how to enhance it. And what I want to show you here is a couple of things that you can do that will enable you to get a better understanding and also a better appreciation of exactly how you would trade very effectively. I'm not going to use large stakes because I want to use that as part of the illustrative process. But basically, if I go into the, let's have a look at the ladder first, actually. First thing is I'm using Betangel charting here because the Betfair charts don't give you a true linear representation over time. And you can have a look at them, and this will give you an indication as to what has happened. So this is telling you on very low volume when the market opened, the price got backed into about 4, which is obviously the price the market thinks is correct. And people have fancied this horse ever since. But when we're looking at it on a very minor basis, can you see how different the charts are? This is just a coincidence that this has happened. But basically, can you see this spike out here and how it looks on the Betfair chart and how long it took for that to appear? So long-term stuff, it's worth nosing at a chart because it just gives you a feeling of exactly what's going on. But short-term stuff, you're going to have to use different charting, basically, to give you a much better representation of what's going on. And what we're trying to do here is we're looking at price activity in the market and how the orders that are coming through are affecting that activity. So you can see the price drifted on relatively low volume, came back on higher volume, and things like that. That's the sort of thing that we're looking for. If you set the charts up the way that I've done it here, this will allow you to scroll backwards and forwards and zoom in and out to be able to look at key characteristics that are going on within the market. Now I've also got the ladder reversed as well, and the advantage of that is if you put two orders in on either side of the ladder and they both get matched, then this will allow you to actually profit even if the price doesn't move. So I'll do it on both of these runners here, and we'll actually have a look at basically what the outcome of that is. Now you can see I only put one side in at 3.8, and that is because I didn't feel that the price was going to stay there for any length of time. So now I'll put one on the other side. So one of the things that you learn when you do this seriously, can you see how quickly all of that happened there? One of the things you learn when you do this seriously is that if you're putting orders through the market and you're trying to get both of them filled, you want to be somewhere in the market where there's equal amounts of money on both sides of the queue. So we're a long way out at the moment, but can you see here, there's £60 here, £30 there, so there's twice as much on this side than there is on that side. So ideally, if you're trading in this manner, you want both orders to get matched as quickly as possible. So you tend to put those orders in when the queue size is similar on both sides. And you can see we've completed two trades on the favourite and the second favourite here. So when we look at this, have a look at something here. You can see I used a £10 stake on the favourite, a £10 stake on the second favourite, and for our successful trade on the favourite we earned 50p, but on the second favourite we earned £2. Now this is before it's fully hedged, so you have to bear that in mind. But from a trading perspective, your objective is to get into the market, get out of the market, and then net a bit of profit between the two. So we've used £10 stakes here to earn a £2 profit. So if we do 5 successful trades here, we've effectively covered our stake. But over on the favourite here, you can see that we'd have to do many more of those, and the price has been moving around a little bit more as well. So can you see the runner that you choose is a determinant on how successfully you trade as well. So you're always going to have to look at the favourite because that's where most of the money is matched, but it doesn't mean that you have to trade it. So yeah, if I go, I'm just trying to think what we should do now. We're quite some way out, we're about 7 minutes out in this particular market. If I go in here and put another trade in, so I've basically laid £10 at 6.8 and I've backed £10 at 7. We'll wait for those orders to get matched. If you keep an eye on the net stake up here, this tells you what your overall position within the market is. So when one side of the order book gets matched, we'll actually be able to see what our total position is. So I'm just hoping that it gets matched soon. There we go. So it's basically, this is £10 back. It's basically saying in order to exit your trade, you've got a £10, you need to put a £10 back bet in the market. We had one in there already. That has been matched, and so you can see our net stake now is 0. We can now do another trade. So this is another aspect that you need to take care about. When you go into a trade, you need to decide how much you want to trade, and therefore you need to manage that trade. And if you do a trade, as we've done there successfully for £10, you can do another trade, but only when your net stake is 0. Otherwise, you're effectively taking substantially more risk. So I'm going to put a lay order in at 7 here, and the reason that I've put the lay order in first was because there was a little bit of money hanging around at 7, and therefore, and not much money at 7.2, so I didn't want to basically get one side filled quicker than the other. But if you do a trade like this where we've opened a position at £10 at 7, you can see we need to get £10 filled in order to close this position. The decision now shifts to you saying, is the money going to get taken at 6.8 or is it going to get taken at 7? Because if you change your mind, you can always move that order down or put another order in to basically close that position out. So if you're getting nervous and you don't think that that position is going to fill, you could actually just completely take it out, or you just move it down to the next point in order to get that order filled. So you can see here, this is our potential profit. If the market's moving fast and we think that we've got an opportunity to catch 2 or 3 ticks, we can always move the order further up. So if I got my £10, then we've got a £10 net stake. If I got that filled here at 7, we'd make £4. But if I can get it filled at 7.2, we will make 6. So you can see that if the market's livening up, and we can see that the favourite's been getting a little bit of backing support over here, there's no reason why you couldn't move it further up the ladder, and then obviously your profitability rises as you move it further and further away. So I can see that developing, which is why I amended that order. I pulled it down to show you sort of what you could potentially do with that, and then I pushed it back up because I could see, and you can clearly see the huge amount of volume that's getting matched here on the favourite. That's pulling the price in. We get that confirmed by the chart, and that is helping to push the price on the second favourite out. So yeah, we've gone in, we've gone out, we've traded, how many trades have we done? We've done 4 trades here. And basically this is how you should trade the market. You trade in, you trade out, you do the best of your ability within a market for a period of time. And then when you've decided that you've sort of had enough within the market, then you go and hedge your position. So here is how much money we've made on the favourite. Here is how much money we've made on the second favourite. If I click on this icon here, that will actually show you the hedged amount, because this little amount next to the scales is the total amount you've made in the market, and these are the hedged amounts on the ladder. I tend to leave that off because I'm interested in that particular trade on any one ladder, and then I tend to hedge towards the end. So if I hit the hedge button here, then you can see it's showing a different amount on here. But if we look at the top, you can basically see this is hedge the position so that we win on every runner basically £1. That doesn't sound like a great deal of money, but of course we've only used £10 to do that. So in effect, this is 10% of our stake. And you could easily do this with £100, and therefore it would be 10 times more. But yeah, the trading process is you trade in, you trade out, you keep the stake the same, you monitor your overall position through the net stake. And then finally, the very last thing that you do in the market is you actually hedge that position. Now you'll see that the net stake has changed here to something slightly larger. That is because we've hit the hedge button. Once you hit the hedge button, you can ignore the net stake. But yeah, a really simple little bit of trading that we've done there. Very easy to explain what happened and how we made our money. And I've also explained why we chose a certain runner and the trading process that went behind that. So one other point that I should make here is that I deliberately picked a window of opportunity here. This is the 1605 at Yarmouth. I traded from about sort of 10 minutes out, but more seriously from about 7. And we exited at 2 minutes. We exited before the race went in play, in plenty of time. The race is about to go in play any second now. And one of the reasons that we did that was to avoid that chaotic period just before the start of the race. You can see the race has just gone in play now. And if you pick a window like that, you're trying to get into the market when there's sufficient liquidity and out before the market sort of loses its shape just before the start of the race. So hopefully what I've showed you in this video and what you've learned is a more structured approach to trading, a method where you can manage your risk, you can keep control of your trading, you've got a clear objective, and then you can execute against that, because if you do that, you will be able to get much more profitable trades in the longer term.